In Money Watch, after years of steady gains in stocks and bonds, big sudden shifts in the market are back.
That's right. That has some investors nervous about what's to come on Wall Street in the year ahead.
So Jeanie Ahn is a senior reporter for Yahoo Finance, and she has more on what this means for your financial portfolio, a most important thing. Because what we've been saying a lot, I think, this year is whatever you do, just don't look at your 401k. Like, don't even look at it. But it's true that I feel like every other month we've been reporting on these record-breaking highs and record-breaking drops and all this sort of stuff. Just, what does this mean for the stock market? How should I interpret this?
So I think that you are on the right track, which is forget your passwords, right? Every quarter, you definitely need to look at your portfolio and manage and assess what your risk tolerance is and look at your long-term goals and see if your long-term goals are matching with your risk tolerance as well as, just generally what you're doing with your money. But ask yourself those two questions when you see red in the market. Does this momentary drop affect my long-term goals, right? And the other one is, what is my long-term goal? What is my time horizon? Are you going to be buying a home shortly? Do you need money for a down payment? Do you need funds for your small business? Things like that. You definitely shouldn't have the majority of your funds in the market, and most likely it's not. If you are nearing retirement, it's likely that your 401k is in a target date fund, which means that it readjusts your portfolio automatically so that the nearer you are to retirement, that your money is the majority of your money is not in the market. So if that is the case, then make sure that you are looking at, you're talking to your financial advisor and saying, hey, do I have a target date fund? If I'm not, what am I doing? Should I be pulling my money out? Those conversations are really important.
A lot of investors may not realize that professional money managers sometimes like volatility in the market. When I used to work on the street, they used to say volatility is our friend because there are opportunities that professional money managers can see which can actually enhance investor portfolios.
That is true. It might be an opportunity to go into the market, right? But if you are averaging what they call dollar cost averaging, right? We're regularly putting money in the market, not all at one time, but spreading that out over time, and making sure that your portfolio is diversified, right? You shouldn't pick one or two or three stocks. You should make sure that it's in a variety of different places. If you are doing that and just going into the market, it's most likely that in a 10-year run, you will see gains.
So that's what I was going to ask you is, I know the advice is not to look at your 401k, but really when you look at the numbers over a long period of time, do we see any actual volatility when you're talking about sort of somebody who's investing regularly, taking a chunk out of their paycheck? Are they ultimately all sort of ending up in the same spot?
Right. So let's look at Warren Buffett, right? He is the richest man in the world, right? He has this idea that if you are diversified and you are putting your money in an index fund where you're not actively managing your money, that the index fund will win out. He's had these competitions, right? So over time, on average, your money will grow 10%, about 8 to 10% year over year in the S&P. So if that is the case, then time is on your side. Time is your best friend. We've said this many, many times. It's not about what you are invested in. It's about how you are invested and also how much you are able to control what you're saving. Right? So it's not just about what you're doing in the markets, but what you're saving also on the side in a high yield savings account.
Yeah, I mean, my 401k, I probably look at it like every 3 or 4 years. I have no idea what's going on in it because I have a professional money manager who knows what my goals are, and I have worked with this person. I've known him since I was a kid. And so there's nothing to worry about. And occasionally I'll glance at it, oh, okay, this is interesting, and then I move on with my life.
So would it have been better for you to not be invested in this record bullish run? We just had an 8-week running streak in the market, right? So you are seeing red and green. It's like Christmas all over again. But it's not. I mean, really, it's Christmas for your pocket.
Yeah, no, I certainly know from where I started investing in my 401k to where I am today, I am well north of my initial investment. So that's what everybody is hoping for. Thank you very much, Jeanie. Always good to have you.